Welcome to this episode of Stock Market Pulse, the free edition. My name is Eric, and today is Monday, July 11th, 2016. I know it's been a couple weeks since I've done a free Stock Market Pulse video, but I've been focused on a couple things since the last time we talked. So first, we got my free trade alerts email list up and running for both stock and option trades. And you can go to the homepage of stockoptionassassin.com right now, and you'll see it here. You can sign up, get your name, email, and hit go, and then you will start getting my free trade alerts for both stock and options trades. And second thing is the new premium stock market TV Vimeo channel for those that are really serious about trading and growing their accounts and building wealth. That might be for you. So first, let's talk about Friday's trade alert. So on Friday, for those that were on this list, we sent out a trade alert. And what we did last week, we've kind of been watching the market, obviously, even Brexit. We've been following the premium channel. We've been doing 2 or 3 videos a week, so we've really been in tune with Brexit and all that stuff. But what we did last week, we took a trade where we did equal dollar amounts of 4 different stocks. And what I think the best sort of trading method right now is to really find undervalued stocks that aren't doing what the market's doing. And so we had 4 stocks, and I'm going to do these are in no particular order. We took equal trades of these on Fridays. The first one was Goldfield, ticker GV, and you can see that here was the Brexit, right? Here was the whole Brexit thing, and the stock really, up until the moment of Brexit, it was hitting a 52-week high. And it's since recovered and really just hasn't even, looked back. It's still going up. We picked this up on Friday in our portfolio, and we're up 3.6% just today. So if you're on that list, you'll get the stops and you'll get targets. And when we get in and out, you'll be notified via email. The next one is HBP, very similar, had a little bit of a Brexit dip, sort of broke out. It's up 2.4% today, and our stop is in place on that one. The third stock we got into was MEET, MEET. It's up almost 7% today. And again, this barely had any sort of Brexit dip. And the last one we got into was YRD, and it's actually down since Friday, but I still like the pattern here. We got a little bit of a cup and handle. We're starting to get oversold, and we have our stop in place. So 3 out of the 4 stocks are up today. And as long as the market continues to sort of grind higher, these super undervalued stocks will continue to push higher. So that's a quick update on the trade alerts from Friday. But let's talk a little bit of macro sort of analysis. And I want to go back to the SPY. Let's just talk about what's happened here. So obviously the market's up. It's hitting a 52-week high today. The NASDAQ's up 0.5%. I mean, there's no doubt about it. We're super overbought. We could pull back for a couple of days at any point. And one thing I'll sort of point out too is IWM is, it's starting to play catch up as well. I don't think it's near the 52-week high. Oops. But it's 52 weeks, way up here. But, it's always been kind of lagging, but it's really starting to play catch up and at least kind of retesting the June high here. But what I want to focus on is the Japanese yen and why I think this is the most sort of untalked about thing that's happening right now. And I want to sort of rewind back to the financial crisis when Ben Bernanke was the Fed chairman, and when the SHIT was hitting the fan, Ben Bernanke had a meeting with the president, and shortly after that, I don't know if it was the next week, I don't know the exact date, they started talking about the quantitative easing, and that's really what caused the market bottom, the printing of money. Assets were inflated. We were in sort of this deflationary thing, and Ben Bernanke, and the rest is history. The market's tripled since then, and the market continues to go higher. Now we're no longer printing money, and rate hikes are on the table and all that stuff, but the market continues to grind higher. I will say this: it's let's go back to the S&P. I'm gonna go to like a weekly chart. We stopped printing money back in this area, and really ever since the market's kind of gone sideways, right? So I just want to keep that in mind, the importance of that money printing. So how does this relate to the yen? So Ben Bernanke, who is no longer the Fed chairman, obviously, is actually in Japan this week to meet with Kuroda, who is one of their financial guys with the Abenomics and all that stuff. And look what the Japanese yen is doing. And there's no secret that this is Brexit, right? When Brexit happened, the market sold off and the Japanese yen, which is a safety trade, rallied hard, right? So it kind of rallied again. But today, however, the yen is down. And typically when the yen and U.S. equities have a little bit of an inverse correlation. So the fact that the yen continues to push higher here, but is starting to pull back, if Ben Bernanke is in Japan and they start talking about doing helicopter money and printing even more when they're already doing this stuff, but if it really gets crazy, they're already doing negative rates. If the Japanese yen can really get going to the downside here, I do think stocks are going to continue to head higher. Now, it's not going to be a perfect correlation, but I do want to point out here was the Brexit dip, right? We dipped for a couple days. This was on June 23rd. If we go back to the FXY, right, here's June 23rd. Here was the pop up. This is the first day I've seen in a while where the Japanese yen actually gapped down. When markets were gearing up for Brexit, the yen was in this huge upturn. Well, now that Brexit's over, and the yen is finally starting to come in, this could have some implications for gold. Now, gold isn't selling off enough for me to enter today. I was actually looking at trading inverse to minors, but you see gold popped up on Brexit, rallied, and the yen is dropping today. So gold and the yen are slightly correlated. So that's something to keep an eye on. What I'm looking for a super kind of leverage trade is buying dust, which is a 3 times bear ETF of the gold miners, meaning if the gold miners were to sell off, the stock would, or this ETF would kind of go higher. It's a little bit risky. I'm not going to lie. This thing can move a lot. It's not that it's not moving a lot today. However, if gold really pulls back here, dust could actually go higher. So it's something we're kind of looking at. But I just wanted to point out the importance there. Probably the story of the week, though, until that announcement or whatever comes out of that, the Japanese meeting with Bernanke, whatever happens with that, financials are the things to watch. I think Citigroup reports earnings this week, and I've been saying with our premium members that if this is the 15th, so yeah, I think that's that Friday. So in a few days from now. So what about Bank of America? Let's check BAC real quick. That's 18th. That's next week. So Citigroup, I think of the big banks are reporting first. And if what I've been telling members is if you get a nice rally in the banks, that's part of the reason the S&P isn't higher, because the banks haven't been participating because the rate hikes are off the table. Well, if the banks have a good report, and we'll know Friday, and Citigroup can rally, then I think stocks are going to continue to rally. So that's what I'm watching this week, later in the week. So that's it for this video. I just wanted to give an update on the market and some of our trades. And again, if you want to get more trades via email, real-time updates, go to stockoptionassassin.com and put your name and email in there, and I'll send you those trades as soon as they come up. You guys have a great night, and we'll see you at the next update.